You are listening to ChartingWealth.com for Tuesday, the 31st of January, 2017. First month of the year, just about done. What do we see going on in the markets? Well, the markets, as far as stock indexes, the two that we check, SPY, which is the S&P 500, and QQQ, which is the NASDAQ 100, both of those are down for the day. SPY down 0.62%. The NASDAQ 100 down 0.78%. Now, we are still in a confirmed up move on the weekly chart. And if we look at in depth at what's going on the two-day chart, still a little schizophrenia there in the S&P 500. Just does not really want to stay up. It hit its all-time high back on the two-day chart ending on Friday the 27th of January and then rolled over on Monday. Was not enough energy even on Friday to penetrate the two-day PPO, that is the price percent oscillator. It keeps bounding off as it did back on Friday the 13th. It did the same thing again on Friday the 27th. And of course, Monday rolled down even more. The derivative oscillator still in the positive, but just barely hanging on. So what's going on? Well, has the market tapped out? We have no trade in the S&P 500 on an uptrend. Now, if we look on a downtrend, what occurred on the 2-hour chart? Well, it crossed over going down on Friday. Now, would we jump into that? No, because the big trend on the S&P 500 is still up. So we have not approached, have not penetrated or hit the weekly trend line. So again, schizophrenia continues in the S&P 500. We are trend followers. We do not try to call tops or bottoms. We want to wait until there is a confirmed crossover on the weekly chart and then trade in that direction, as long as the other parameters we have set are working. If you don't know what all those are, you need to. And how do you get that information? You go to chartingwealth.com, you sign up for our newsletter, and we will send you 3 things. Our How to Read a Stock Chart video, which tells you what it is we do and how we do it. You need that. In addition to that, we'll send you our daily market worksheet, and we will send you the layout that we use from freestockcharts.com. Now let's keep pushing through these charts. Back to the two-day chart. And again, you are potentially, those of you who have gone back and are backtracking and seeing how well our vertical crossovers work. We have one that actually started on the week ending. Let's see here. We just need, I am getting rid of an extra line that I don't need. The week ending, oh, I know why I'm having the trouble. I'm looking at a two-day chart trying to give you a weekly ending point. On our weekly chart, the week ending the 25th of November is where we had the vertical crossover in the S&P 500 moving up. So that weekly chart is continuing to still move up. Well, we're seeing some price movement on up, but we are seeing, even on the weekly chart, we are seeing the PPO, the price percent oscillator, turn down, heading toward the red signal line. Not a good sign that the S&P 500 is necessarily going to continue to go up. In fact, it's really hit just about its high point all the way back on the 16th of December. Yes, it did go above that one other time on the week ending the 27th of January, but again, it did not stay there. So let's go back to our two-day chart. Take a look at the Qs. We do have an interesting weekly movement in the Qs. The Qs crossed over on the weekly chart on the 9th of December, and we had a nice run up through the end of the week on the two-day chart, end of last week on Friday the 27th. What's going on at this point on the two-day chart? A spinning top, which means lots of indecision. Like we said earlier, the Qs was down 0.78%. Now remember, we had our crossover also on our 2-hour chart going up back when we drew that on the 24th. And of course, as we've talked about, we started topping off and sliding sideways for several days. Derivative oscillator losing energy, and it has crossed over going down. Those of you who are in that trade, hope that you took some profits, if not all of your profits. Doesn't mean that the trade has ended just because the 2-day charts rolled over, but do be careful when you jump into trades and things are going your way, not to hang out too long and lose everything that you gained. Now, you wouldn't have if you hopped in back on the afternoon at 2 p.m. on the 24th. You would have gotten in at the opening at 123.46, still up over $1, even if you took this little bit of a loss. Now, what does the weekly, well, the 2-day chart shows us, of course, that the trend is weakening. We do see, really having to zoom in, we do see that the PPO is now sideways. It is not heading down, but it is petering out based upon the losses throughout the day on Monday. So pay attention to that. Now, those of you who are in the weekly trade that started on that week ending the, I guess it was around the 20, let me see here. We're going to go back to that weekly chart. Sure, I'm flipping a lot of charts today, but it's worth it. The week ending the 6th, that's where we saw the changeover occur. And of course, we jumped in at 121.30. And of course, even on a bad day when the market did not accelerate any higher, the market low was, we started at 121.30. The market high throughout the course of the day was 125.38, and the market low 124.13. So you're still up $3. And what are we seeing as far as that weekly goes? Well, the weekly is continuing to move up, not as strongly as it had been, but it's still in an up move, and our Heikin-Ashi candlesticks continuing to move up. So again, pay attention. Don't lose what you've gained, but at the same time, you don't want to pull yourself out too early. All right, let's go ahead and continue to move through these charts. Let's go to TLT. That again is the 20-year bond fund. What is it doing? Well, it looked like it might have hit a bottom. Now, we never had that crossover on the weekly going up, but it pretty much peaked out on the 2-day chart ending on the 17th of January and has moved down since then. Was up a little bit for the day, less than 0.5% at 0.42%. And we continue to see a crossover has not occurred yet, although the derivative oscillators crossed over going down, but the PPO, the price percent oscillator, has not. So again, bonds still in a down move on the weekly chart. If we do have a confirmed down move on the 2-day chart, you may have a down trade, of course, after the 2-hour chart pulls back and then starts moving in the same direction. A lot of ifs there. Not seen that happen yet. Last chart for the day. Let's jump into gold. Gold crossed over at the end of last week, going up on the weekly chart. Now, not making us feel real great because it was actually a red open box candle. Did have a large wick on top, a little wick on the bottom, but it did confirm its crossover on the weekly chart. At the end of the week on the 27th of January, we looked for a buy-in point during the course of the day. And again, we looked to get in, if possible, around 10:30 in the morning. That's the time that you want to jump in after idiot hour has ended. And of course, the opening point of that was 113.57. You're up about 50%, 50 cents on the day. We're going to continue the 30 minutes still hasn't crossed over going down. Continue to pay attention to that. If you look at the 2-day chart, you can see that it is sideways. It is still in an up move. So again, we're experimenting. We want to see how well jumping in at 10:30 on a Monday is going to work on this potential gold trade. If it doesn't work, we want to cut our losses and get out as soon as possible. For those of you who like that 4-hour chart, let's check out how it's doing on gold. As it started working again, well, it crossed over going down at a low of 113.95 and at 94. And of course, gold appeared to close Still hasn't crossed back over going up. It did go down after that. Gold closed at 111, let's see, 113.58. I'm sorry, 113.92. So again, we're waiting for that 4-hour chart to start giving us that accurate, wonderful information again, like it did through most of the prior year. Folks, that's where we are as we end the day. If we can help you, let us know. Go to chartingwealth.com. Guess what we just did? We just uploaded a great new training video to YouTube. We'll be posting that also at the website very soon and get it on iTunes for you. If you appreciate the training that we do, hey, the best way to get it is to subscribe to chartingwealth.com, where it'll show up in your mailbox every time we post new trainings and market reviews. Thank you so much. God bless. Let us hear from you. Appreciate what we do. Go subscribe to our YouTube channel. Follow us Facebook, Twitter, Instagram, YouTube. And of course, please go to iTunes, subscribe to our podcast, give us a 5-star rating, say something nice about us. You guys have made us as high as number 6 in the world in stock market podcasts, and we appreciate it. God bless you. Take care from chartingwealth.com.